Hi everyone, welcome to episode 24 in my monthly series where I present you my top 3 dividend stock picks of the month that are designed for income and where I'll give you a quick high-level update of the stock market in the last month. This month actually marks the 2-year anniversary of this YouTube channel and of this video series. I cannot believe it's been that long. So if you're new to the channel, welcome aboard. This channel focuses on a long-term buy and hold income-focused investing strategy. So the primary objective of this strategy is to generate relatively safe, consistent, and high passive income forever. So we achieve that goal by investing primarily in funds that have blue chip stocks and that use income-enhancing strategies like leverage, like covered calls in order to really achieve that high consistent income. This strategy enabled my wife and I to become financially independent in our mid-30s back in December 2019. So this channel is simply to show you all how we invest for maximum passive income so you too can achieve financial independence as quickly as possible. I'm Canadian, so most of the stocks and funds that I talk about on this channel are listed on the Canadian stock market. But since we invest in US listed funds in our retirement accounts, in our RRSP accounts, one stock pick out of the 3 will be a US listed or American stock pick. So stay with me if you're American or invest in the US stock market. The first pick will be for you. And if you're Canadian, the first pick is always great for your RRSP or Lira account because there is no 15% withholding tax on those accounts. Also, don't forget to check out my previous monthly stock picks if you missed them as well. If you're new to the channel, many of those picks are still very, very valid and good picks this month as well. I have a specific YouTube playlist on all my stock picks of the month videos, so make sure to check it out. Very easy to find them. I also took the time to make several playlists for you where I group several related videos together, like my portfolio unveil videos, my investing strategy and philosophy videos, etc., etc. So make sure you check out my playlists. It's a good place to start if you're new to the channel. So what happened in the market in the last month? Well, the Russia-Ukraine conflict is definitely dominating the headlines all around the world and has caused some volatility in all markets, right, in every sector. But one sector that is doing particularly well is energy. So instability, uncertainty with any oil-producing giant like Russia will, of course, cause oil prices to spike, helping energy stocks, right? So the US market, which is very tech heavy, is seeing some slight downward trend, but nothing too crazy. And the Canadian market, since it's very heavy on energy and financials, has been holding fairly firm. This is why I keep preaching to all of you all the time the importance of diversification. If you own everything, you will always be in a good position because you will always likely balance out, right? When some sectors do bad, other sectors do good, and the cycles reverse itself. So it's just a constant economic cycle. It's really not a hard concept to grasp or it's not rocket science, right? Instead of guessing, trying to get in and out of certain sectors, getting in and out of the market constantly, it's always better to be a diversified income-focused investor where you just hold everything. You invest regularly over time and capitalize or try to capitalize whatever is down or suffering in that particular month. It's very easy, it's very consistent, very hands-off, just the way I like it. So should we expect more volatility? Probably, but don't fear, don't panic and sell your assets. We are buy and hold passive income investors whose bread and butter are covered calls, don't forget. And when do covered call strategies or covered call funds shine? Well, it's during this type of market, flat or sideways, zigzaggy, volatile, whatever you want to call it. So let's hold firm together, everyone. Let's collect our sweet passive income month after month and try to look for opportunities instead. The theme for this month's stock picks is definitely brand new funds. So I guess my style of investing is getting more and more popular. So all 3 of this month's stock picks are really designed for high passive income, and they're really new and unique funds. So the 4 criteria, as usual, for my stock picks: I own the fund myself or plan on owning it in the near future. Number 2, the fund or stock must provide a consistent source of passive income, so a dividend or a distribution. The dividend or distribution must be relatively safe and sustainable. So in other words, the fund should be designed to provide consistent income even if the stock or whatever the fund invests in fluctuates. So covered calls, of course, helps to make this a reality. And of course, last but not least, the fund needs to have good value right now, either because the fund is trading at a discount to its NAV, or the sector or region that it's focused on is experiencing some hardship right now. So without further ado, let's check out our stock picks for the month of March 2022. I just want to take a quick moment to thank the sponsor of this video, Harvest Portfolios Group, one of my favorite Canadian fund managers who really specialize in income-oriented ETFs or covered call ETFs. I own many of them myself, and they actually just released a brand new all-in-one income-oriented ETF called the Harvest Diversified Income ETF. The stock symbol is hdif, which targets an 8.5% yield annually. So make sure to check out their website and their fund lineup. The links are in the video description below. All right, everyone. So pick number one, brand new. Well, it's been out for 6 months, but it's relatively new. It's called the Simplify Volatility Premium ETF. This is my US listed stock pick of the month. Stock symbol is svol, vol for volatility, so SVOL, listed on the US stock market. Fund manager is Simplify ETFs. The dividend payout is monthly. The annual dividend, $3.97. However, it does vary monthly. So this is literally the average of the last 6 months, the last 6 distributions, which is how long the fund has been out. So svol is a new and unique income-oriented ETF which shorts the VIX. So they short the VIX. The VIX is a graph or a measure that a graph that measures volatility in the market. So they short that to generate high monthly income, but they also buy a protective call option on the fund in case the volatility spikes or VIX spikes. So if you're shorting the VIX, it means they think volatility is going to go down, or this fund writes options that or gets premiums with the notion of the volatility goes down. So just in case the VIX spikes, like it did a crazy amount in March 2020, for example, they actually buy a covered call, a call option in case it does. So the MER is 0.54%, pretty decent. The 1-year high stock price, 28.41, which would give you a nice yield of 13.97. But get this, the price has gone down a bit because volatility has increased. So it's at 23.38 now, giving you a crazy yield of 16.98%. Now that's what I'm talking about. So here is the distribution history. So here are the last 6 distributions of this fund. As you could see, they vary monthly, but they're relatively, relatively stable or in line. So you see 25 cents, 34, 29, 35, 39, 34. So why is this a pick of the month? Well, this is a new and unique US listed fund, perfect for us Canadians for our RSP or Lira account because there's no 15% withholding tax. So just buy and hold long term for very high monthly income. The yield is over 15%, so that's a big plus. It's a perfect time to pick up this ETF because it's downtrended a little bit. It's gone down lately because volatility increased, so it has good value. I really like the fact that they buy a protective call option, which prevents the ETF from crashing when the VIX spikes dramatically. The last 6 distributions were declared and they really didn't disappoint. Very high, very consistent. I love the fact that this ETF holds nothing, right? It's not tied to any particular asset class or sector of the market. They literally just short the VIX. So it's, as long as there's trading and there's volatility to short, this fund will be completely fine. This is a possible rising star in my personal RRSP portfolio. Time will tell. I did just purchase about $5,000 worth. So expect a detailed video on this fund eventually, and hopefully a Q&A with the fund manager. I really want to talk to them because it's a very interesting fund. So we'll see what they say hopefully in the near future. Pick number 2, my first Canadian listed pick, is the Harvest Diversified Monthly Income ETF. Brand new ETF. I love this one. Stock symbol is HDIF. It's managed by Harvest, of course. The dividend is monthly. The annual dividend is just under 85 cents a share. So this is a brand new all-in-one ETF, which combines the 5 most popular Harvest covered call ETFs, and on top of that they add 25% leverage to enhance the yield, and the yield target is 8.5% with this one. So management fee, by the way, there is no management fee because all the underlying 5 ETFs are managed by Harvest anyway. So those underlying ETFs have their own management fee, but there's no extra management fee on top of that by investing in this fund, which is really, really cool advantage. So the 1-year high stock price doesn't tell us much because it just came out, but it was $10.35, which would give you a yield of about 8.21. But right now it's at 9.58. So you have a yield of a little over the target of 8.5, which is really, really good, 8.87. So here are the 5 ETFs included in hdif. These are on an equal weighted basis, so it's 20% each. So you have HHL, all healthcare companies, big blue chip healthcare companies, Johnson & Johnson, Bristol Myers, and all the best pharmaceuticals are there. You have HTA, which focuses on the best technology companies in the world. HBF, which is a really cool one, focuses on the best brands in the world. So things like Apple, McDonald's, Pepsi, JP Morgan Chase, Caterpillar, Shell. They have really cool stuff here. Very powerful brands in here. Microsoft, I believe, is there too. HUBL for the US banks. So you have all the best US banks. And HUTL, which focuses on worldwide utilities. I really like this one. Very, very defensive. So there's a lot of Europe and North American utilities here. Everything to do with electricity, telecom, and pipeline. So why was this a stock pick? Well, this is a brand new, convenient, very convenient all-in-one covered call solution by Harvest. You have instant diversification with this fund. It's equal weighted, so it's 20% in each of the 5 ETFs like we saw. The 25% leverage is great. It enhances yield to a nice 8.5% annual target. It's US focused. So this is a great fund for us Canadians to hold in our TFSA and cash account because we don't have to worry about the 15% withholding tax. That is taken care of by the fund manager because this is a Canadian listed fund. Canadian listed, no matter what's inside of it, doesn't matter, no 15% withholding tax. And the main reason why it's really a pick of the month is because the US market, which is tech heavy, is suffering lately compared to the Canadian market, for example, which is very financials and energy heavy. So it's a great pickup right now. Anything to do with the US in general is a good pickup. No management fee, that's pretty good. All the underlying ETFs are Harvest, like I mentioned earlier. What I also really like about this is that 40% plus of this fund is very defensive. So 40%, you got 20% healthcare, 20% utilities, so HHL, HUTL, so 40% defense right there. And I added the plus because there's also some defensive, very strong companies in the brands. A lot of consumer staples, which I consider defensive, things like Pepsi and McDonald's and really cool brands in there. So really, really good defense. Harvest is a very reliable and experienced covered call fund manager. You guys know it's one of my favorite covered call fund managers. They are sponsoring us for the whole month of March. They use a dynamic approach to covered call. So it's not set in stone like BMO, for example. They only write up to covered calls on 33% of the portfolio. That's max. And it's very dynamic. So they're always, every month they're going in and out and making sure they're writing the appropriate number of calls to really hit their monthly distributions, which Harvest, as you've seen, are very, very, very consistent across the board. That was my third last point: consistent monthly distributions, no management fee for HDIF. Of course, the ETFs inside of it have management fees, but there's no management fee on top of that. And I'm very excited to announce, I've already filmed it, it's in post-production, a very cool Q&A video with the Harvest CEO, Michael Kovacs. We're going to talk about this fund. We're going to talk about Harvest in general as well, so you don't want to miss it. Pick number 3 is another brand new all-in-one solution ETF, which focuses on covered calls. It's the Hamilton Enhanced US Covered Call ETF, stock symbol HYLD. They like to call it HYLD, like you've seen me discuss with Rob Wessel in a past video. So the dividend payout is monthly. The annual dividend is right now at $1.65 a share. So HYLD is an ETF, very similar to HDIV, their other enhanced covered call ETF that holds 7 covered call ETFs and also uses 25% leverage to enhance the yield. So like I said here, very similar to Hamilton's HDIV ETF, but this one focuses, like the name says, more on the US market. And get this, the yield target is 10%. There is a management fee at 0.65%. And, the 1-year high stock price doesn't tell us much because it's new, but 1656, you would get just under 10%. But get this, right now, it's at about 1590. So you get a little bit over 10% yield, which is awesome. So here is the 7 covered call ETFs in here. So you have 3 of the best, and in my opinion, my favorite covered call US listed ETFs. You have QYLD, XYLD, and RYLD. So QYLD is the biggest and most popular covered call ETF in the US market, focuses on the NASDAQ. XYLD is the classic S&P 500. RYLD, the Russell 2000, really like it. Focuses on small to medium cap companies in the US. So just these three, it's kind of like getting all of the US market. But they also have HHL from Harvest is in here, which is just healthcare. You have Harvest Brand Leaders, HBF from Harvest, which has the best brands in the world, which it is included in pick number 2 in hdif as well. But you also have TXF, which focuses on tech. And then, of course, you have HEP, which is also an hdif, which it focuses on gold producers. I really, really like that move to add a little bit of gold producers in there. So it is equal weighted, but you might see the percentages change. That's normal because some funds do better than others, so they'll get bigger, but they do rebalance it semi-annually to make sure it's all equal weighted every 6 months. So key points and reasoning. This is like hdif, a brand new, convenient, all-in-one covered call solution by Hamilton. You get instant diversification. It's equal weighted, rebalanced semi-annually, like I just mentioned. 25% leverage as well to enhance the yield, a super cool 10% yield target annually. It's just like hdif, a US focused fund, great for us Canadians to hold in our TFSAs and cash account because we don't have to worry about the 15% withholding tax. Once again, US market, right? Very tech heavy, which is suffering lately compared to the Canadian market. So it's a great pickup right now, it has good value. And it's finally a way for us Canadians to hold my favorite or the best 3 covered call ETFs listed in the US. In my opinion, of course, QYLD, RYLD, and XYLD, which is like capturing the entire US market with one fund without having to worry, once again, about that 15% tax. Consistent monthly distributions. I like the addition of HEP. I found that's a really nice touch because it provides a small hedge when the overall market, like we saw HEP and its competitor CGXF, been doing really well lately because inflation has been going up and the market's kind of a bit volatile. That's when gold producers and gold shines. So it's a nice little hedge to have in there. And I've already did a HYLD video or HYield video where I talked to Rob Wessel. So make sure you check out that video if you haven't seen it already. Thanks for watching, everyone. I really appreciate it. Please show your appreciation by hitting the like button, hit that thumbs up button. It's free for you. It takes 2 seconds and it helps the channel grow. So it's a win-win. Also, if you like this type of content, this channel is all about investing for passive income. There's stock picks. I got a lot of great content coming up. I'm always thinking of new content. So make sure you're subscribed and hit that little bell button next to the subscribe button so you're notified every time a new video comes out. You don't want to miss my new content. We also have a website. Make sure to check it out, passiveincomeinvesting.ca. That's where you could purchase my digital product, the ultimate DIY investing package, which is on version 3 right now. I'm very proud of this product. It's a companion tool, a reference tool to really help you build your own portfolio, whether you're a Canadian investor or an American investor. There's sample portfolios in there according to different investing styles, not just income, what I do, but there's also some growth and dividend themed sample portfolios in there. And it comes with lifetime updates, so you only need to purchase it once. So make sure to check out my website for all the details on this product. There's also a video there where I show from A to Z what this product is, so make sure to check it out. Also on my website, I offer right there on the homepage a one-on-one consultation service with yours truly, me personally. It's a 1-hour Zoom meeting face-to-face in case you want more personalized help where I go over your situation, help you build a portfolio according to your own needs, answer all your questions, help you transition a portfolio. Whatever your needs are, I will do my best to help you. I love doing these sessions. I limit myself to 4 a week. They sell out very quickly, so I apologize for that. I know many of you keep sending me emails. I always miss the consultation. Well, I can't do more than 4 a week because I need the time also to create more content. So just look at the little message on the homepage there, right on top of the calendar to get a status if the calendar is open or not. But I will let you guys know via YouTube community post and a Facebook post when the new appointments are open. Speaking of Facebook, make sure you join our Facebook group, which is almost at 10. We're almost at 10,000 members now and going up. every day. So it's a nice little group where people post their questions, they put their portfolio, and we all try to help each other out when it comes to passive income investing. So make sure you join us there. We're also on Instagram. If ever you want to know a little bit more about our personal day-to-day life, you could follow us on Instagram if you use that social media platform. Don't forget, guys, the mission of this channel, my mission will always be the same. It's to help everyday, normal, regular working people to invest on their own in order to build their own stream of passive income to enhance your quality of life and one day become financially independent. So how do I always leave you? Make sure to continue staying safe, stay healthy, and of course, stay passive. See you next time.